Welcome back. It's Merritt with SMBFutures.com. After the long holiday weekend here, came back Tuesday the 22nd. Let's take a look at crude oil, what we saw on the day, opportunities, order flow, you name it. Let's dive in. So our hypo today, we had an area of 53 even, 5300, so right here. So we posted about that about 10 minutes before the open. That's our main line in the sand for the session. Hypo 1 was for us to actually wick from above down into this area, kind of clear out some stops and trade higher up into 54.30, so quite a ways higher, back up here. Hypo 2 is a hold underneath the line in the sand for a move back down to 52.50 or a stretch target of 51.70. So same line in the sand for hypo 2 if we're holding underneath it, which would put us to 52.50 as a target, or a stretch target of 51.70. All right, so let's change the color of this because it's the main deal, and then these were just targets. So right off the open, in fact, just before the open, there could have been an opportunity or two where it looked like there was a potential wick, but ultimately after the open came, it was a breakdown and hold below this area. It looked really ugly as this was developing. If we go over here to the profile, it's a gap down situation, and we had at one point in time put in an AB poor high here and an AB poor low here. It was just total kind of choppiness, as you can see on the price action back over here. So unfortunately, the way we view markets with auction market theory, looking for auction cycles to complete and excess to be put in place, that doesn't provide us with a great trade location or a great reason to really aggressively get into a trade, even though it would be easy for me to come on this video and say, look, we wrote it down before it ever happened. We held below 53, which was hypo 2, and then boom, we ran to the target. And in fact, you could see clear stops being run through the target and didn't make it to the second one. I could easily say that, but that wouldn't be true in terms of practical nitty-gritty trading. And so for us and my students, I thought that it wasn't a great looking high here as we kind of tested 3 times into this area. So the expectation for me was that we actually put in more of this sideways consolidation here, if you will, a small balance, and that first we get some kind of a stop run and then could short, or we get a stop run below and pop back and then begin looking for longs. Instead, we got a nice clean breakout that just went. So not a great way to take advantage of that based on the profile giving us poor high and poor low on the session. Just not a great trigger for my taste personally. So we did run down to target 2. At that point, hypo 2 is complete. Once we really started to press through here, the expectation was for this stretch target destination. But what did we run into right here? Right here, 52.10. That would be the most traded price if we kind of look at more of these TPOs here. Recall that what's happened overall. We were in a big balance area going nowhere from January 9th through January 17th, which led to the break, then the holiday half MLK Day session right here, and then today's a gap down, and we're kind of testing back into that. Well, this right here is the most traded price of all of that area. And so that's certainly one of the things that we monitor, at least my students, where when you do see a strong reaction from that, and let's take a look at the tape right here. We see a reaction. We see the buying on the tape. What do we see when they try and start pulling back and potentially heading lower? There's no one selling it. There's no aggressive participation from the sellers. So nice little heads up there that nothing really on the downside was happening. And in fact, we were seeing that classic rejection from kind of a point of control area. So from there, here we are yet again with not a great way to work into a trade. For me personally, I was looking at the fact that 5250 was now kind of the main reference. The initial line in the sand for the entire session was up here. But anything below 5250, my expectation is for a move down into that stretch target. So even though this occurred here, even though there's a lack of continued selling, I didn't feel very comfortable from a risk-reward structural perspective getting long from this area below 5250. So I didn't think that was a very good trade. And so I think that's more of a good place to sit on the hand. Again, it would be so easy for me to just say, look at the order flow, and based on that, you could have gotten long here and blah, blah, blah. That's not a truth-based, process-driven thing that I teach, factoring in all the factors and all the components. It just doesn't work that way. So we have to be selective and honest with ourselves as traders. I think it's one of the most difficult things to do. It's so easy to look at a chart and say, we could have shorted here, our hypos even called for it, and we could have gotten long here based on this rejection from a key area and the shift in order flow and the lack of selling. It would be easy to say that, but it's not the case. We have to be more stringent about everything aligning in order to really trade with great risk reward in our favor, and I didn't think we got that nearly at all today. And then just to kind of wrap up what I saw, the market, there was a bit of absorption here as sellers tried to press and hold these 5250s. Didn't happen. They get ripped up. And sure enough, this close, I think, really validated my initial hesitation around shorting in this area, in the fact that the market did indeed, let's just look at the profile here, need to come up and clean up that poor high. And that's exactly what we did into the close. So an interesting session here. I think there's possibly more that you could learn about not trading, even when with the benefit of hindsight, the trades would have been good. There's a lot to learn from not trading sequences where you don't get the right risk reward and things don't line up, even though you may have one variable that says this is a good idea. We need to have multiple variables that line up for quality risk reward trades that meet our standards for having a quality playbook of setups that we pull out of the bag. So definitely great lessons to learn, and we'll see y'all next time.